Hey there. So you've just taken a leap and launched your own business or started your freelancing journey here in India. That's awesome. This explainer is built just for you. We're going to break down one of the first and honestly kind of confusing hurdles every new entrepreneur faces, your very first tax year. Let's get right into it.
So let me ask you a quick question. You've got the brilliant idea, the business is officially a thing, but do you actually know when the tax clock really starts ticking for you? The official start date? Because the answer might not be what you think. Okay, so before we jump into the special rule that probably applies to you, we gotta get the basics down first. Let's quickly cover the standard rule that applies to, well, pretty much everyone else. This is the baseline. You think the law would be complicated, but it's actually pretty straightforward on this one. Section 3, subsection 1 of the Income Tax Act lays it out plain and simple. A tax year is that 12-month period that kicks off on April 1st. Right, so for any established business, any individual who's been filing taxes for years, it's the simple rhythm, April 1st to March 31st. Easy to remember. But, and this is a big but, if you're a new business, this is exactly where the rule book gets a little different for you.
And this is the cool part. See, the law gets that new businesses don't just magically appear on April 1st. So there's a special exception, a little clause, written in there just for new beginnings. This is the section that matters to you.
And here it is, the exact legal wording. It talks about the tax year beginning with the date of setting up and ending with the said financial year. Okay, that's a bit of legal jargon. So what does that actually mean in plain English?
Well, it really just boils down to this. Your personal tax year kickoff happens on one of two dates. It's either the official day you set up your business, the date on the paperwork, or it's the day your new income stream actually started. That specific day, whichever it is, that's your day one.
Okay, theory is one thing, right? But seeing it in action really makes it click. So let's just run through a quick case study to see exactly how this whole thing works in the real world. All right, let's meet our fictional startup. We'll call them Innovate First. They've done all the hard work, they're all set up, and they officially launched their business on, let's say, October 15th. Notice that's nowhere near April 1st. It's smack dab in the middle of the standard financial year. So what does this October 15th start date actually mean for Innovate First's tax filings? Let's ditch the text for a second and just map this out on a timeline. I think you'll see it makes a whole lot more sense visually.
Okay, check this out. The normal financial year for everyone else started way back on April 1st. But for Innovate First, nope. Their first ever tax year only begins on their launch day, October 15th. It then runs until that standard finish line, March 31st. So get this, their very first tax year isn't a full 12 months at all. It's actually only about 5.5 months long. That Innovate First example, that's not just a story. That is the exact rule that applies to your new venture. So what's the one single thing you absolutely have to remember from all of this? This is it. The bottom line. For your very first year, just forget about April 1st as your start date. Your tax clock starts ticking the day your business is born, and it stops on the very next March 31st. It's a one-time, shorter tax period just to get you synced up with the standard cycle. And there you have it. Simple, right? If this explainer helped clear things up for you, do me a favor and hit that like button. And hey, if you know another founder who's probably scratching their head over this exact same thing, share it with them. You might just save them a whole lot of stress. And of course, subscribe for more explainers that make complex stuff easy. So, now you've got your timeline. You know your start date and your end date. That's a huge step. But that's really just the first piece of the puzzle, isn't it? The real question is, knowing that unique window you have, are you prepared for all the planning and filings that have to get done inside that first tax year?